Now, Mr. Alberta, listen. Oh, sorry, I mean Patrick. Having said all that, and I think that's fantastic. My question is this: you called it about affordability, you called it about Alberta, fantastic. The question is, where do you go from here? Given affordability, given the difficulty of doing business in the space, and I got to say that I'm seeing more deals out there than I've seen in many, many years. I mean, it's for someone who's really in it and is willing to work it and has capital available to them. It could be a phenomenal market right now. I know I'm experiencing that myself, even though it's very difficult and it takes a lot of work, more work than ever before. It doesn't mean it's not workable. I want to make that very clear for people. But for the average person, Patrick, I can appreciate, and you can appreciate, that the average person that has a full-time job, has got a family, kids in hockey, got all kinds of stuff going on. Like they don't want to slug it out with me for 60 hours a week in the real estate market, perhaps. So what should they do?
Well, one of the things that we teach and we've shared many, many, many times, which is that there's no bad market to invest in real estate. There's just the wrong strategy. And right now is the time for many to start shifting the strategy. So let's break this down. First and foremost, we know that economically, when we look at what's happening, we're starting to see a slowdown. But when we look at housing specifically, we start to say, okay, the market continues to grind higher, rents continue to go higher, demand continues to increase just because of population, and then the issue of supply that we have, which is not enough supply. So as investors, what do we do? Well, to your point, JG, it's harder than ever to get mortgages, to find deals that cash flow, to find deals, period, because there's so few listings. So what do? The next phase is, okay, we see the opportunity to put our capital to work into a store of value, given where we see the global macro and what's happening in Canada. We need to get our money to work. This is so important. Inflation is not going away, and our dollars are losing value just consistently, monthly, weekly, yearly. Put it to work. Where to do that? So ultimately, we look at limited partnerships. We look at general partnerships. We look at private REITs. We look at private funds. Now, you have to do your diligence on those, JG. But if you understand the economic fundamentals that we've been teaching for 30 years, you say, okay, I'm going to take that and I'm going to apply my knowledge to looking at that limited partnership, looking at that general partnership, looking at that private REIT or that private fund. And then I can start to place capital. I don't have to go to the bank to get a mortgage. I don't have to come up with 20% down. I mean, there's lots of funds out there. You can get in as little as 25 grand. And so there's opportunities that are out there. The key here is, how do I get my money to work in real estate?
And Patrick, you make an interesting point, which is you don't necessarily have to, and I know I do this as well. You don't have to, it's not all or nothing. It's not like, you put all of your money necessarily, a lot of people want to hold real estate themselves. They want to have that duplex or that triplex or that fourplex or whatever the case may be. Fantastic. You should go ahead perhaps and do that. If you have the willingness and you have the, if you have the knowledge and the education, and if you've learned from, incredible organization like the Real Estate Investment Network, then you should go ahead and do that. But that you can do other things too. And I know that I've moved to other, for example, I work with with a real estate investment trust that invests exclusively in industrial real estate because I want exposure to the industrial market, but I don't want to do it on my own. I want to do it through them. So I work with them in industrial, and I have another partnership that I do commercial investing in Alberta, for example. So the point there, Patrick, is it's not all or nothing. And sometimes people think in all or nothings. They think, oh, I should put all of my money with REITs. Well, not necessarily. You might want to diversify it, but definitely I agree with you, Patrick. REITs, LPs, GPs, when you do your proper research on this could be great options for real estate investors to at least get themselves in the games and get off the sidelines. That's the critical part, because while they're on the sidelines,
Hey, what's happening?
your money's being devalued. Your wealth is being eroded. You're not getting a return on investment, or a very small return on investment. You're not growing your wealth, and you're not in the game. And when you're not in the game, it's very difficult to make a difference in your overall financial future. You only have so many years here to get your financial future under control. It's important for you to be in the game, on the ice, if you will. Unlike the recent Toronto Maple Leafs that are completely shitting the bed, might I add.
Yeah. Well, of course, that's kind of expected of Toronto. But I think there's we go back, and I'm just going to keep shining a light on this. inflation continues. We are losing value in our currency.
Yeah,
Bottom line.
we should talk about that though, Patrick. We should show actual numbers because you say that, but you know what's funny is that inflation's kind of out of the news now, right? It's kind of lost its luster with the news cycle, I find. So why don't we look at like what's actually happening with inflation right now? Maybe I could put up a couple charts here in terms of what's actually happening with inflation. And there it is. There's a great bar chart showing inflation. Then you could speak to what you're about to speak about.
Well, I think, at the end of the day, what we see and we continue to see since the pandemic and all the things that went on, where printing of money, the debt that Canada's taken on, we're going to continue to now buy our own bonds. I mean, it's just so crazy that we have this huge debt. Taxes are going to continue to rise. And so aside from, CPI, and when we look at what the shelter costs are, that CPI is significantly higher. They keep pretending it's coming down. And as you know, you're going to the store, you're buying food, you're buying gas. We just had that conversation. There's nothing that in terms of our day-to-day costs of living that prices are going down. Go to a restaurant, you're paying astronomical numbers just to have a meal these days if you want to go out. So the point of it is this: we have to put our capital to work. And I can't stress it enough. The value of our currency globally, I mean, whether it's US or Canada, and Canada is really losing out to what's happening in the US right now in terms of that exchange, the debt levels that we have and the payment that Canada has on that debt, our dollars continue to shrink in terms of value. We have to get it invested. Real estate is that store of value, and we need to put our money to work.
So this is right here, folks, is what's happening in the inflation camp. So inflation's still on a year-over-year basis. This is as February of 2024. In Canada in general, 2.8%. But as you can see, it's quite different, Patrick, on a province-by-province basis. You look at Alberta running the hottest right now. To be expected anytime an economy is running as hot as Alberta's is right now, definitely inflation is going to be up. Probably, I don't know if you expect this to go up or down, Patrick, but it really depends what happens to the Alberta economy, because the previous inflation was really a question of a supply chain interruption and the supply shocks of that happened back in COVID. But now we're kind of through all of that now. So it's interesting what's happening with Alberta and where it's going to go going forward, because right now they're sitting at 4.2%. And if this doesn't get under control soon, people are going to start shouting from the rooftops again.
Well, yeah, certainly, but you have to look at percentages and put them in context, right? So if you're in Alberta, you're feeling the rising costs, but when you look at it on a national basis, 4.2%, for example, we were just talking about gas being $1.65 in Ontario and $1.99 or $2.10 in British Columbia. And when you get into Alberta, you're in that 155 to 165 range. I don't have the exact numbers off the top of my head, but the point is that it's significantly less. So 4.2% on a lower number. So what's your base? Then it starts to, put it in perspective. So yes, it has gone up 4.2%. It's a hot economy. It's going to continue to grow because oil is going to continue to be kind of climbing. And that's always kind of shows up well for Alberta, although they're maxed in their production, I think. But ultimately, that's what's going to start to happen.
Now, interesting, Patrick. Overall, though, you could see here from this chart, CPI is definitely trending in the right direction. I have no doubt. I told you this from the very beginning, that the government would be patting themselves on the back, saying they've done a phenomenal job at getting inflation under control. And you're going to start seeing that all over the news, I believe. And you could see the trend from their perspectives going back in the right direction. Now, I think the average person is probably feeling a little different. Hey, I have a friend of mine, listen, I'm not kidding you. He told me his grocery bill for his family, he's got a relatively large family, 4 kids, 2 adults, $2,000 a month, Patrick, $2,000 to $3,000 a month for a family. I'm thinking, holy crap, that's unbelievable.
Yeah. Well, they're eating well, but that's not that number is totally believable. And when I say they're eating well, I just mean that it's not like they're being extravagant, but that would be a pretty normal bill, and not surprised by that number. But
I want to hear from people that are watching this. Put it in the comments right now. And I want to know, what is your grocery bill? Like, I'm just curious. I was blown away, Patrick. Honestly, number one, everybody knows I don't have kids, so I don't have that part of the budget. But there's no damn way I'm spending $2,000 a month on grocery, not even close. But I don't have kids. These kids eat a lot. I don't know. I mean, it's how much are you spending, Patrick?
I don't know. I don't track my grocery bill. Sorry.
Right? But I don't know. I'm going to ask around the office how much the people here at Vistier pay, but I mean, it's just crazy. But the point is that, even though inflation is trending down, government's going to be patting themselves on the back. Bank of Canada is going to say, yay, we did such a great job getting inflation under control. I think the average person is kind of saying, like, what the hell? Kind of like that guy with his Escalade this morning, like,
oh my God, only $170 to fill my tank. Yahoo for me.
And a big part of the reason why this, not only groceries, but also shelter, Patrick, the cost of shelter has gone up. You can see rents there, which is the purple line, continually trending up. And you can see that mortgage interest rate costs has gone up significantly in the last 18 months.
Well, there's a couple things around this, because CPI is dropping. What's happening is everybody's holding out for interest rates to come down. They're looking, probably 0.25% or 0.5% in June, although that sentiment is starting to shift. I'm still in the camp as of today that I don't think we will see a rate cut before the end of the year. Now, we may in the last quarter see 0.25%, like 25 basis points, maybe 50 basis points, maybe by the end of the year, but I don't think so. So as much as we hold out that the Bank of Canada is going to look at CPI and go,
okay, we can cut a rate,
it's not going to happen because there's other parts of the market that are still on fire. And I think they're going to be very, very tentative. And so that's part of the expectation on CPI.
Well, number one, a couple things. You told me to point out where you have been wrong. You've been wrong on rates a couple times here. So I'm hoping you're wrong again because I want a rate decrease, right? We all want a rate decrease, I think. I know you do. I know you do, buddy. But I will say this. I will say that I'm thinking my personal thoughts on this, and I'll come back to telling you how you're wrong in a second. Don't worry, I haven't forgot about that. But one of the things a reason I think they're holding out on rates as long as they possibly can is because I think there's a ton of pent up demand in the real estate market. I mean, I meet with real estate investors and I meet with ordinary people every single day that are just waiting for the rates to come down in order to get back into the real estate market and to buy that duplex or buy that second home or do something. And I think the government knows this. I think the Bank of Canada knows that the minute they come down, there's going to be a pretty massive spike in activity, and they are just waiting that out as long as they possibly can. And naturally, they're going to do what they always do, which is they're going to move too much to the one side. They're going to wait too long, and that might create some pain for people. I do think that's what's going to happen. But that's my prediction on, and I don't know when they're going to take their foot off the brake, so to speak. But I do think they're holding out as long as they possibly can.
Well, I think let's just talk to this a little bit because we don't have a chart for it, but what's happening in the background right now is, go back to the supply issue and what's happening in Toronto and Vancouver. And definitely what's happening is developers have hit the brake. Now, that's one part of it. So they're not building, number one. Secondly, in Vancouver, they're already starting to crumble. In other words, we're seeing bankruptcies of developers. We're seeing insolvencies. In behind the scenes, banks are having to deal with saying, how do I get my money out of this developer, given that the developer can't get a deal done because nobody's buying pre-construction, yet they've got the project in the ground. And so no dollars coming in because people don't want to invest given the interest rates. So this is starting to, and you're going to start to see a lot of headlines of developers that are insolvent and bankruptcies. It's just starting. There's a lag that happens, JG. It's not like the developer, the CEO, or the whatever corporation wakes up one day and goes,
we're broke.
No, it's a process. And then some of this, and the banks don't want it to go to litigation, but if they do, that takes a long time. So the point is that over the next 12 to 18 months, we're going to start to hear a lot more about developers that are collapsing. And it's already in the works. This isn't rumor. We don't have a chart to show it, but I've been listening to a number of insiders and everybody's going,
this is not going to get pretty.
So that might be what inspires the Bank of Canada to drop rates, but by then it's too late.
That's the problem, is that these developers, and being a developer myself, I mean, not on that size of scale, but they're going to hang on as long as they possibly can because they can't unwind it. It's either the whole thing unravels or it stays alive. Like it's do or die in their business, especially when you have condo towers that are going up. So they're hanging on, they're hanging on, they're hanging on. They're getting bridge financing, they're getting specialty financing. I mean, they're literally kicking the can down the road as far as they can. And then one day they can't get it anymore, and it's over. It's done. The whole thing gets unbuttoned, and that's kind of what happens in that space. So, the longer this goes on, the more of that which will occur. I 100% agree with you, Patrick. And don't think, I believe anyways, that the very powerful developers, they're calling the Bank of Canada. They're working the back channels, and they're saying,
Guys, you have got to lower these rates. You got to give us a break here.
and you saw this in the U.S., by the way, a little bit with the regional bank crisis that happened I think it was last year at this time. And then the government came in and put in some policies and saved the day there. That's in air quotes, saved the day. But I'm curious to see what's going to happen here in Canada. But you're absolutely right, Patrick. The longer this goes on, the messier it's going to get, no doubt about it.
Well, I think we've got a headline coming up on it. I don't remember where it is, and we may not have. But sales in the GTA/Toronto of pre-construction are down. Get this, JG, 70%. 70%. That has a huge impact on a total industry, from realtors to lawyers to the bureaucrats who shuffle paper across desks to the banks and the mortgage lenders. I mean, it has a huge impact. 70% in the largest market in Canada in that condo pre-construction world. And I mean, those are epic numbers. So again, we're only starting to hear more about this now. It's like April 1, if you talk to the insiders, it was like April 1 when we should be ramping up. It was the total opposite. Instead of the switch being flipped on, in many sectors or in many regions, the switch got flipped off. And so it's thrown everybody for a loop. And a lot of people were depending on April to be a good month, and it's just not been.
Yeah, it's a really it's going to be interesting to see as the year progresses what's going to happen. And I'll tell you, and I've said it right from the beginning, Patrick, it's always the same thing. The government does too little too soon and too much too late. And they did too little too soon. They kept the rates. And of course, this is all in hindsight. Of course, it was easy for us. And by the way, we loved it when the interest rates were nice and low. We loved it. At least I loved it. So, and the rates were too low, and they didn't raise them fast enough. And even though in our particular world at the time, Patrick, I mean, this is one of the things you said. You said
they're never going to raise interest rates that high.
Well, they did, and they weren't supposed to keep them this high this long. Well, they did, and now they're gonna play this out too far, and this is where that harder landing is going to come. And we'll see. Time will tell in terms of when that's going to happen. Is it going to be later this year? Is it going to be early next year? We don't know. I certainly don't know.
Nope. I mean, listen, we have to I've always said, create a thesis around it, and then you have to kind of look at probabilities and then make decisions based on that. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.